It's about politics, trying to bring the OPEC countries together. Obviously, Iran feels like they're doing a deal that's going to facilitate aggressive U.S. policy against them if countries like Russia and Saudi come in to make up the barrels and help take Iranian supply off the market. It's about politics because the U.S. looms large over this meeting. There's a bill moving its way through Congress, a NOPEC bill. The Saudis are going to want President Trump to oppose that. And we heard Khalid Al-Fallah talk yesterday about the concern for consumers. They're worried about not just China and India, but President Trump's Twitter account getting upset about oil prices again.
Let's go back to real basics, a couple of points here as well. First of all, Khalid Al-Fallah talking about this supply crunch in the second half of the year as a justification for putting oil back on the table. Is that accurate in your view?
I think that they're concerned. I mean, look, they're trying to thread a really careful needle here with a Goldilocks oil price. They don't want oil prices that are too high because that hurts consumers and gets President Trump's Twitter account upset. It also leads to demand destruction, brings new high-cost barrels of oil into the market. They don't want oil prices too low because they need the revenue in Saudi and elsewhere, and they want to make sure there's enough investment today to bring supply in the market a couple of years down the road.
Mr. Trump barks louder than anyone else, but he's got a point when he's backed up by the Indians who I spoke to earlier this week, who are very concerned about the price of oil, by the Chinese, who are also incredibly concerned as well. So yes, Trump's tweets get the most notice, but the fact is all the consumers are complaining bitterly at the moment, aren't they?
The consumers are very concerned. They're worried, especially as we worry about the pace of global economic growth with a potential trade war. That's another area where U.S. policy is coming into this whole conversation. But this is at the same time. Let's remember that when oil prices fell to $30, everyone said OPEC had declared war on shale, and they asked if OPEC would ease up. So OPEC can't really win either way.
Well, they had declared war on shale. That was Mr. Naimi's policy, but Khalid Al-Fallah has had a really iron grip like control of the oil market, or at least that's what he wants to portray as well. They got the deal that many thought they couldn't get. They kept the deal going for 18 months. Is there a concern that there's going to be disintegration in the message, opacity in what's actually being supplied, and actually despite his control of the JMMC, which is the Ministerial Monitoring Committee that went on for about 5 hours here last night as well, that he will lose control of members and indeed the non-OPEC players as well?
Well, it's a bigger risk, I think, especially because what's so interesting now is the role that Russia's playing in this. This isn't OPEC 14, it's 24 now, and they're trying to keep Russia on board. There's always been historic difficulty making sure that Russia stays part of this deal. So he's got a really difficult act to put together, where you want to make sure that Russia remains part of this as well as the other non-OPEC members. But Iran, as I said, is ready to walk away because they view everyone as undermining them and facilitating an aggressive U.S. policy.
Jason, you threw in another acronym as well. You said NOPEC as well. Now, a lot of our viewers won't be aware of that. They think that was another OPEC organization as well. But it's actually very important. It's about antitrust. It's about Sherman Act. It's about whether the cartel can be sued by the United States. Can you give our viewers a bit more color on this and why it's important this time?
Well, the easiest thing to do politically is to get upset and try to look like you're protecting consumers when gasoline prices go up. So when gasoline prices go up, every politician in the U.S. and elsewhere runs to show they're doing something to help the consumer. This bill would allow antitrust actions to be brought against producer countries. It's failed many times in the courts and in Congress. It's been around for years. President Obama was opposed to it. President George W. Bush was opposed to it. It seems like President Trump might be more willing to support it. And I think that might be part of the conversation happening now to make sure that if the Saudis are going to help provide some relief on gasoline prices, President Trump might oppose this, not to mention take a tougher line with the implementation of sanctions that pull Iranian barrels off the market.
So let me get this right. We've talked a lot about various relationships, and most of what we're talking about is politics as well. The relationship between the United States and Saudi, which is shutting out Saudi barrels into the US more and more these days as well, but are key allies in the region, and yet at the same time the president is railing against the policy of the kingdom as well. How does this relationship go forward? It seems very subtle and very complex.
I think geopolitics looms large over this meeting. You have a bunch of dynamics now outside the oil market that are connected to it that are relevant here. The U.S. and Saudi have a closer relationship in this administration than the Saudis did when President Obama was in office. And you have this new implementation of sanctions against Iran, which is an important foreign policy priority, not just for President Trump, but for the Saudis. But all of this has implications for the oil markets unless countries can come together and put more supply on.
And let's go back to another complex relationship. This is the one which we've often talked about, a symbiotic between China and the United States. If tariffs go ahead and 25% tariffs go on US exported product into China as well, that creates opportunities for OPEC as well, of course, because those 300,000 barrels a day plus are actually going to find themselves at a price disadvantage. So that could play into OPEC's hands as well. So China as a consumer is a very important story as well.
And it's a fascinating new dynamic. I mean, the U.S. for 45 years has looked to OPEC and worried about what it does to support oil prices. We've been an importing and consuming country. Now we're an exporter, and that can be used against us. And so when you have a trade war, China threatens retaliatory tariffs, and that also has the potential, this trade war, for a depressive effect on oil demand growth.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.